Let's take a minute to look at why we created the National Construction Lending Alliance program. We originally started this program because we realized that there were a lot of contractors and borrowers, just like you, that were really good at finding great deals, but were having a challenging time finding enough money to fund the deals, or they were looking to scale their business substantially and didn't have adequate capital resources. Because of our extensive background in the construction and rehabbing business, we decided to build a program in which the borrowers who are looking to fund more of their deals can team up and get their deals funded. And that's exactly how the NCLA program got its start. This program is backed by a $25 million California state fund, as well as a $30 million national real estate fund. Our contractors and borrowers love it. It's been a huge success. Now we realize this model isn't for everyone, but the ones it works for, specifically investors and investor contractors that have more deals than money, or investors that really want to scale their business, it works really well. We built strong, long-lasting working relationships with borrowers that have completely exploded their business. The real key is they realize the value in having basically a money partner type lender. By teaming up with our NCLA program, now they can spend all their time doing what they're really good at and have a passion for, and that is finding and completing super good deals. We are looking for only well-qualified, very experienced contractor borrowers, or borrowers that can show they have a very solid team to complete the projects. Let's take a look at how the National Construction Lending Alliance program works. First of all, our goal with this program is to fund as much of your project as possible. Sometimes this can include the purchase price, rehab price, interest reserves, points, and closing costs, as long as it meets certain criteria. 2 in particular. Number 1, we will need to show that everyone has skin in the game. This can be done with cash, cross-collateral property, or even subordinate seller carryback. Generally, we will need to see approximately 35% of the total loan amount as skin in the game. Of course, a cash down payment is the most straightforward way to cover the 35% requirement. If you, or a co-investor of yours, can put that money in place, the rest of the process becomes easier. Cross-collateral property just means that you use another non-owner occupied property that has adequate equity in it for additional collateral to make your project meet the loan-to-value ratio requirements. This may be a property that you own, or you may even have an associate that's willing to join you in your project that has qualified cross-collateral property. Subordinate seller carryback just means that the seller of the property is willing to take back a note and deed of trust or mortgage for a small portion of his equity at the time he sells his property to you. By doing this, it can generally allow the property to qualify because your loan-to-value ratio will be lower. And number 2, we need to be sure that the total loan-to-completed value ratio, or ARV, does not exceed generally 65% of the after-repair or as-completed value. Once we know that the numbers are solid, here's how the program works. We've set it up so that everyone gets compensated by the project for what they bring to the project. Here's our project that we need to get funded. Now, as a lender participant, we put money into the project. In exchange for that, we get interest, generally 12% interest, which is paid by the project. If you, as the borrower participant, put cash into the project, you may get the same rate of interest on the cash you put in as well. If you put work into the project, you get paid the standard going rate for that work that any other contractor would get paid. This too is paid by the project. Then, as a property is being completed, each of the contractors and anyone that works on the property gets paid for what they do. This gets paid from the project as well. We have framers, plumbers, electricians, landscapers, real estate agents, title companies. Basically anyone that has done work on the project gets paid by the project. Now, once everything has been paid by the project, the profits go into a bucket, and from there the profits are shared. By doing it this way, everyone gets compensated for what they bring to the project. With the National Construction Lending Alliance program, we are able to fund residential and commercial new construction, as well as non-owner occupied residential and commercial rehab properties. Again, the primary way we differ from other private money lenders and hard money lenders is that our goal with this program is to fund as much of your project as possible. Depending on the needs of the project or borrower, we also do gap funding. In many cases, we will work closely alongside standard hard money lenders to help them and their borrowers complete their project by filling the gap money requirements. This program is set up for short-term loans and generally runs anywhere from 6 to 12 months. Occasionally, but rarely, depending on the project size and scope of work, we may extend past 12 months. Now that you know how the National Construction Lending Alliance program works, and you feel you and your project may qualify, take a few minutes to fill out the funding submission form on this page, or click the link below, which will take you to the Lending Alliance funding submission form. Please be sure to enter accurate and detailed information, because the more we know about your project, the more likely it is we will be able to help you.